From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, good day. Welcome to the COB. I'm Nadine Blaney. It's wonderful to be here with you. Monday, start of a brand new trading week. And we've kicked things off on the 28th of July in fine form, I must say, up by about 0.4%, so nearing the highs of the day. That's the COB Australia Index on your screen. And we'll watch the S&P ASX 200 for a few more minutes as the last of the day's trades come through. U.S. futures have been in positive territory throughout this session. There's a bit of optimism on the trade front, the EU and the U.S. signing that 15% deal, with the EU also pledging to buy a whole bunch of U.S. goods. But what it does is it erases some, I suppose, of the big questions over global growth if there were to be a higher rate of tariffs. So we'll see what progress is made in Stockholm, as China and the U.S. talk further on trade. Might have a bit more of a truce coming through for now. So we'll check back in with the overall market. There was a bit of corporate news out there today, wasn't there? Who's the boss? Now that's referencing Boss Energy. We'll get there in just a moment, but boy, it's not often you see a share price down by about 40%, so not Boss today. Hello world, we had a update coming from the company and all looking good. I'll detail that in just a moment. And then Unwise Tech, because we did hear that Richard White will be replaced pretty much by his right-hand man, his chief of staff, somebody who's been at the company before. So shareholders questioning whether or not there is any change to come, or if it will be a sort of a puppet, I suppose, the new gentleman for the founder and strongman Richard White. So that's on the corporate front. Broad-based sector-wise, we did end up seeing WiseTech Global pick up the pace, rising by, as you can see, close to 0.7%, but the entire tech space did pretty well. At one point, WiseTech was really sort of lagging, and that's because we had yet another record finish for the NASDAQ on Wall Street, FOMO in full effect. Yeah, momentum trades continuing, and it is an absolutely massive week when it comes to U.S. earnings, particularly in the tech space. I'll get to that with my guest, Josh Gilbert from eToro, in just a tick. Had a great chat with ST Wong from Prime Value Asset Management today for his view on CSL, on Ramsay Health. You can find that online at ausbiz.com.au. I also asked him about Cochlear. We had the last call on Friday, and my guests then said that they weren't expecting really great things from Cochlear this earnings season. We'll see. Did pretty well today. Sonic Healthcare up by 0.8% to $28.24. So it was a bit of a tale of two cities here, because the miners were down significantly. BHP, Rio, Fortescue, as you can see on your screen. Fortescue off by about 25 cents to $18.10. That's after iron ore has been on a bit of a run. Lithium as well, lithium coming off. So those miners, generally speaking, down. And then I mentioned Boss Energy. Well, the contagion spread. It spread right around to those uranium miners after it sees higher costs for its Honeymoon project in FY26 due to a decline in average tenor. It also flagged operational headwinds at that Honeymoon project. Wow, down by close to 43%. WiseTech, as I said, promoted its chief of staff to succeed scandal hit founder Richard White. His name is Zubin Apu. He only rejoined WiseTech in April, and the appointment is effective immediately. Bubs Australia had a good run early in the piece after a CEO appointment and also upgrading its earnings. It's now expecting FY25 earnings to come in at $5.5 million or even up to $6 million versus a loss of close to $20 million a year ago. There's Hello World, I mentioned, up nearly the most in 5 years on that forecast hike, pointing to margin improvement, cost management, and gains on a revaluation of its stake in Webjet Group. Clarity as well. Today it's up by close to 3% to $4.24, and very proud to say there is news. It had a premium placement to Instos that went well. Now, in the mining space, further than Boss and the uranium miners, Bellevue Gold was actually one of the better performers today. It's given up some of those gains, gold coming off today, but it did have strong quarterly production results. Perseus Mining, though, falling on lower sales and a pretty bleak forecast. June quarter gold sales were actually lower than the PCP. In some of the broker moves, we had Regal Partners advancing after Bell Potter upgraded its forecast for the company. Netwell, Hub24, both higher as Morningstar upped its fair value estimate on the stocks. Meantime, Whitehaven Coal share price did fall. We saw ratings cut, Citi downgrading it to neutral from buy, Bell Potter downgrading it to hold from buy. And Stealth Group, if you hadn't heard of it before, nor had I, had to look it up today. Sales surging on e-order sales for mobile accessories that are aligned to Apple's iPhone launch. So pre-sales up 50% year on year. Titomic had a UK manufacturing launch. Noxopharm had a successful first dose for its autoimmune disease drug. And that's up by close to 22%. So to get us across the big picture, welcome to the COB on this Monday afternoon. Josh Gilbert from eToro. Josh, not a bad way to start the week here locally in terms of the equity market performance overall. Would you agree?
Yeah, good afternoon, Nadine. Look, a positive start to the week. I think obviously plenty of optimism, I think probably baked into the local market coming from, I think that US and, European trade deal. Look, although I think it's probably more of a sigh of relief, I think, from the market. That's why we're higher. I don't think it's necessarily going to be a huge boost to markets throughout the week. One, because I think that maybe some of that was, now priced in, expected, especially after that sort of Japan pact that we had. But I also think we're ahead of a massive week as well. So I think quite often, on a Monday ahead of such a massive week, whether that be, macro, whether that be earnings that we've got coming through this week, we would tend to maybe see a little bit of, risk off, especially given we are sort of trading, at all-time highs. So I think it's a great start to the week ahead of what is going to be, a very important week for markets.
It sure is. Let's just focus on perhaps what we get here. Tomorrow it's quiet. But we do get that inflation read, the all-important quarterly inflation read. Risk around that, particularly for the Australian dollar. But would you say equities as well? Because, we've priced in this expectation for a cut.
Yeah, look, I think there is that sort of risk coming in. I would say, though, that it feels unlikely that we are going to be disappointed. That's how I feel anyway, coming, from what the numbers that we've seen recently. It was a surprise, I think to most market participants that we didn't obviously get a cut at the start of this month. I think that, what the RBA was saying is that they wanted to wait for a little bit more information. We know that they are, they prefer that quarterly, data point over the monthly numbers, which is probably why we've seen them wait till this month. But it feels that, ultimately that the data points that we've had, I think in recent months, whether that be from, employment data, whether that be from inflation data, retail sales data as well, I think it's pointing towards a cut. So yes, I guess there is that element of, okay, if this does come in a little bit hotter than expected, and, it does say, okay, prove the RBA right for sort of sitting on hold, then, we could see, markets come under a little bit of pressure. But I think from what we're seeing in the data points that we've had over recent months, I think that this is a number that I think is going to come in, and I think it'll ultimately solidify that we are going to get a cut coming in August. And I think it will be a surprise to see them not cut in August, given the data points that we have continued to see coming through. So yeah, look, a big number, and obviously it will either nail on a cut or basically tell us that the RBA were right.
Yeah, Josh, when it comes to the U.S. Central Bank, of course, we've got the Fed meeting this week. Is a 15% tariff level and, with Europe enough to head off any of the Fed's lingering concerns about the potential for rising inflation?
I'm not sure. I think ultimately we've seen Jerome Powell sort of stay on hold, right? Since I think the last time they cut rates was in December. So Jerome Powell was obviously pointed to tariffs and that sort of big uncertainty around it. I think that, of course, we are sort of starting to see the US strike those deals coming through. We've got a pause again with China for another 90 days. So I think really for the Fed that sort of trade outlook does sort of complicate how they move forward with policy, because tariffs are that double-edged sword, right? For the US and that sort of debt ceiling, etc. It's great news, and ultimately, really this is a sign that for the US, this is probably one of the greatest trade deals that we've seen, for history. I'm not the oldest, so you probably struggle to go back and find out that. But I think what it does show is that we've got a businessman at the helm, right? So whether we like him or not, Trump is ultimately getting deals done, and he's getting deals done for America. But it is going to push up prices. That's going to add to inflation, and that could potentially drag on growth at the same time, whether that's through straining supply chains, weighing on business confidence, etc. So I think we're going to hear a lot from Jerome Powell this week. I think we're going to be looking towards that statement, because basically the view is that they're going to stay on hold. We obviously know that Trump's relationship with Powell is obviously not great at the moment either. But for me, I think it will be, what are we hearing around the growth risks, trade, any hint that tariffs are having that impact on inflation? Because if it is, that's going to push rate cut expectations back further. So again, really not looking at that decision. We're going to be looking at that commentary, and what the sort of board are saying, and especially what Powell has to say in that presser afterwards.
Okay, let's get to it. Let's get to those tech results. Apple, Amazon, Meta. What else am I missing? I mean, it's a big one for U.S. earnings. How do you think it's going to play out when you look to what we've already had coming from, the likes of Alphabet, for example?
Yeah, Alphabet was a great read on, I think, what we can expect. And I think another name that, for me, that is a great read on what we can expect from big tech is Taiwan Semiconductor. Really good earnings a couple of weeks ago, showed that, demand for chips was really, really strong, AI demand coming through. And that's going to be coming from one of its biggest customers, which is NVIDIA. And the biggest, customers for NVIDIA are, your Microsoft, Apple's, Amazon, and Meta. We saw Alphabet increasing CapEx once again. So I think that's going to be something that we're watching very, very closely across all of these names. Meta, Microsoft, Amazon, their strategies have been very clear on AI. We know Meta is sort of launching this super AI sort of powerhouse. So that's going to be something that we keep an eye on pretty closely. I think it was its super intelligence lab that they were launching. Microsoft, we know, is a key player. Amazon, the biggest cloud name, in the books. Of course, we know it's a sort of a retail giant. But when you are sort of the largest cloud provider, your bar is going to be set pretty high. So for Amazon, they need to show that it's not just sort of keeping up with AI, but pulling ahead. And I think for Amazon, we're going to be listening quite closely around those sort of retail numbers as well. But operating income is largely driven by AWS. But for me, the key name is going to be Apple. Shares are down about 15% year to date. Really haven't had from them this sort of clear AI strategy so far. So I think it disappointed back in June. We had that developer conference back in June, and it was a bit of a disappointment. So we really want to hear on the earnings call that sort of signs of progress, whether it's integrating AI more deeply into Siri, whether those sort of new AI features on device are taking shape, and also plans for AI investments. We know that Apple doesn't talk too much around CapEx, and the other names do. And they've sort of taken a bit of a conservative approach so far, but these sort of competitors are really running away with it now. So we want to hear more from them about that, especially at a time when you've got weakening demand coming from your product segment, which is sort of a key revenue driver. We want to hear more about iPhone 17 as well. That's expected to come through in September. So for me, we've got an Apple that, isn't very shiny. I wouldn't say it's rotten right now, but it's certainly not the pick of the bunch out of the Magnificent Seven, that's for sure.
Ooh, I like it. All right, Josh, thank you so much for joining us today, getting us across today and the week to come. We'll speak soon.
Thanks, Nadine. Take care.
Take care. All right, can't look past Boss Energy. Today's shares absolutely tanking. We spoke with Nathan Summerson-Durham and Francesco Distratus on the call today. Here's what they had to say.
I would keep a close eye on it, but at the moment I'd say if I own it, I'd probably hold now, continue to hold. If I don't own it, I'll watch.
If you're there, look, I'd be saying hold on, because I don't think, if they were geared up and the thematic for the commodity is bad, then you dump and run, because they get into real trouble. But in this one, I think the commodity is doing all right. The thematic is still positive. Operational issues, yeah, you can't forecast that. and costs are going to go up everywhere. All miners are telling you that.
Well, after that sort of negative news around Boss Energy, let's take a look at some of the market leaders today. And Magellan Financial Group doing really well. Thank you very much. I'm just having a little look. It's amazing how much the leadership changed today. I don't see any news, but up by 4.7%. Perhaps it's the interview we did last week with Alan Pullen from Magellan's Global Opportunities Fund. I'm just being facetious, but it is up on LinkedIn if you'd like to have a listen. Also, you can find it on our website. Premier Investments is up by close to 4%. Newmont is up. Generation Development and Clarity, as we mentioned, with that successful placement. Boss Energy, by far the worst performer. Pilbara as well. We had even though we had Canaccord Genuity lifting its price target and actually out there speaking quite positively about lithium in general, just couldn't do it for some of these companies, including Liontown Resources, after the run that they have had. Its target price lifted 36% to 95 cents per share by Canaccord. In the small to mid-cap space, we've touched upon some of the news in the small cap space. There's Hello World Travel, Cettire putting on 8%. Euro's Hartley's as well. Lagging the market though was some in the resources space. In fact, that's dominated by the resources names, including Coronado, with the coal miners coming under a lot of pressure, off by 17%. That's a continuation of the move that we saw beginning last week. Tonight, we get the Dallas Fed Manufacturing Survey expected to show continued improvement. We also have an OPEC Plus panel meeting, unlikely to make any changes to the existing plans to raise oil output when it meets. And of course, we've got the US and Chinese economic officials resuming talks in Stockholm. So we're looking for some sort of, either an extension of the trade truce, really easing, I suppose, the path to see some sort of a meeting between the two leaders. Pretty interesting times that we're living in right now. Not so much here tomorrow, as far as economic data at least. Looking forward to more corporate news, but we do get tomorrow night U.S. home prices, the JOLTS job report, and the U.S. Conference Board consumer confidence read. So, final figures. Well, we've got the S&P ASX 200 market now closed, and it's done pretty well today, sitting at 8,698, up by close to 0.4%. As we make our way toward the U.S. Open, we've got E-minis, S&P 500 and NASDAQ E-minis up by 0.5% to 0.75%. So it's one to watch what happens on the trade front, no doubt, tonight as well. I hope everybody has a great night. We'll be back tomorrow. We're live from 9:45. If you've missed anything that we covered today, and there's been a lot of really great interviews, you can do so online at ausbiz.com.au. Stay with us.